Hi, welcome to the Market Alert for Wednesday, the 23rd of February 2017. So yesterday, this chart isn't quite the right picture actually, because we didn't have the sell signal there, and the sell signal just after the FOMC was actually a winning trade as well. So let me show you what happened in real time. Obviously the data provider has updated bad ticks, and once the historical data is pulled through, it's changed what we had during the live session. So here we go. Then we've got the start of the session. We had a sell signal. This then also was followed by a potential buy signal. The market then went on and filled the buy signal, trading up to the scalp line there. And just after this, I sent out a note to say stay out of the market, wait for the FOMC meeting. So we'll fast forward. The market traded sideways there, also putting in a new high as it went along. And then we had the FOMC minutes. They came out, we had a sell. The market filled it and traded down to the scalp. We then had a reversal with a buy. This was filled. The market then went into a sideways phase and managed to close just above as the market went into the closing part of the session. So that's yesterday's truer picture, not the one that you actually see here. In the daily charts, we've got another record high. Let me just remove some of these. We're now sitting at 20,786, heading towards the 21,000 level. And also, let me just remove these two. We discussed this in yesterday's alert. So let's just put back the all-time high there, and then we'll grab a 50%. And starting here, you can see where we are now. So the market's got to close below the 50% to show any potential weakness coming into this market. Failure to do this will see the market remain to the long side in the bigger picture there. So news wise today, let's have a quick look. Let's see what we've got. We've got Kaplan speaking at 6 p.m. Crude oil inventories at 4, normally out at 3:30, but when we have a holiday they switch to 4 p.m. for some unknown reason. So watch 4 p.m. and 6 p.m. we've got an FOMC member, which is only medium impact, but hopefully we'll have had the trade within the first hour, no doubt to the buy side, before being able to just call it a day, as the market tends to go sideways at the moment following the first hours or a couple of hours of the session. On the implied volatility, 9.55, up slightly from yesterday, as you can see in the chart there. And also just a quick article here called Spot the Difference, Presidential Difference. In 2009 we had the bottom of the stock market, and with Trump we've got the mirror image where we've got the one of the biggest bubbles, and as Trump said himself during his campaign election, we're in a big fat bubble, and if that bubble crashes it's a problem. I hope if it explodes it's going to be now rather than 2 months into another administration. Unfortunately it's going to happen on his watch, and all of the signs are there that it's putting itself into place. We've got the distribution in the real chart. Let me just bring this in so you can actually see it. As I've shown you before in the weekly chart, you see the massive increase in volume week on week. In my opinion, this is not new buying, this is the pros being able to offload as the market moves to the upside, and that's precisely what we're seeing, this massive increase in volume there. And also, again, it's even more stark in the monthly chart there. You can see the big spike that caused the bottom of the QE phase, where it started the QE phase, all the way through. The volume just petered and petered out, and now we've got this situation where we've got a massive increase in volume, which is indicative of the market starting to distribute. The pros wouldn't be buying at this level. They'll be getting out because they know that something is around the corner with regards to 8-year run following the crisis. Well, nearly 9 years now, weakest recovery in history, and if there's no more QE, the market is going to run out of steam. Now, it's the only thing that will keep the market moving to the upside and that following a correction or any sort of mini crisis, printing of more money, and then you'll see the market move. I think the market's waiting for his tax reforms and what he's going to do with regards to funding the infrastructure that he proposed in his campaign speeches. So we'll just have to wait and see there. But at the moment, it's got all the hallmarks. But as I said, here the market will continue to move higher unless it closes below the 50% retracement of the rising lows we've got at the moment. Simple technique in order to see how much momentum is in the market. At the moment, it remains to the upside. We've had 9 straight days now of the market making new all-time highs, but we are going to get the odd day where the market actually has a losing day, which is going to feel quite strange when you've seen the market making new all-time highs each day. It's very easy to get lulled into this complacency that the market will continue to do that. No market has ever done that in the history of the markets, but it's very easy to get sucked into. That's how it becomes the new normal, when in fact it's not. Right, that's it for today. I will report in later on during the session. Other than that, thanks for watching, and I shall see you in the next one.